Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, we're going to be breaking down how to mark up your charts as a profitable trader. Now guys, let's begin. When it comes to marking up your charts guys, you have to first understand these patterns. What exactly are you marking up, right? So when it comes to the markets move in three ways. Right? The three ways are a downtrend, right? The second way is sideways, or aka consolidation, right? And then the last way that the price moves is an uptrend. Now, your job as a trader is to catch the trends, not the consolidation, right? So it's to catch the trends and not the consolidation. That's your job. Your job is to catch moves like this, right? Within this gray box, not this particular move here, because this is a consolidation, and consolidation just means, you don't know exactly who is in charge of the markets. But if I tell you in this particular box here who is in charge, we know, okay, it's sellers because price is overall going down. But here you don't really know because price is ranging, going up, down, up, down, up, down, right? It doesn't really pick the direction. But in this second box here, you know, okay, yes, the direction is up, which is, buys. So coming to this, right? So coming to NAS 100, we're basically looking to, mark up, the trends of the market. Now, guys, when it comes to marking up the trends, where I mark up my charts is actually the 1 hour time frame. And I'll give you a disclaimer, right? Because you're marking up charts in the 1 hour time frame, right? The trend changes, within a week, it could change like 3 times, right? So that's why you have to be really pay attention, to what you're marking up and what you're looking at whenever you're trading the NAS 100, right? So with that being said, when it comes to the charts right now, as we speak, right now, the NAS 100 in the 1 hour time frame is currently bullish. How is it bullish? I'll show you exactly. So if you notice here, right, so price was buying, right? Price was buying, creating higher highs and higher lows. And then all of a sudden, when it created this high here, it now broke the previous low. This was the previous low that created this high. Why? Because, it had two solid sell candles that created the next high. So when immediately price broke past below this is where the change of trend to sells now occurred. So immediately that happened, notice how price, refused to go above this high, indicating, okay, yes, it's actually selling, and instead of creating lower lows, lower lows and lower highs, things like that. And then while it was creating lower highs and lower highs, it now stopped here. And then all of a sudden, it now broke past the previous high that created the low, right? So again, guys, this was two solid bullish candles. So if you have at least two solid bullish candles, then you can consider that as the real elbow for where price has to break to indicate a change in trend. So in this case here, this was the change in trend here. So this candle was the candle that broke structure. And then as you can see, it started creating higher highs and higher lows, right? Creating this mini higher highs and higher lows, as you can see, right? Now notice how here, it's broke, this candles here basically broke past this low. But like I told you guys, right, it has to, in order for us to say that, okay, the change of trend has happened, it has to break past, the previous low that created the high. And the previous low has to have at least two solid, candles, right? In the case of an uptrend, it has to have two solid white candles or sell candles for it to break. So when price broke this particular low here, it still is not valid for a change of trend. Instead, we had to wait for, price to break below this, which it did at this time. So immediately it did here. This was what? A change of trend from buys to sells. So again, guys, literally the trend was like, basically this was the trend, and then all of a sudden it now changed trend again. So that's why, like I said, guys, the 1 hour time frame does change trend a lot. So you have to really be wary about, what is happening at that time. So with that being said, price came, broke, structure here, indicating the change the trend to sells. It retraced as we're expecting, and then of course it now did this sideways movement and then now sold down. Now, because it's a downtrend, we're expecting price to retrace normally and then sell, retrace, sell. That is basically what we're expecting. But instead of that, we now we now seen that, okay, it gave you a solid sell, but then within that same day, it now broke trend, indicating a change in, trend from sells to buys now. And now we're expecting price to basically do this. Now, when it comes to marking up your charts, right? In the case of an uptrend, in this case here, we're going to be marking up the demand zones. So these are the demand zones right here. So the demand zones is basically, the pivots, right? So basically the demand zones is just, the demand zones is just this highs right here. These highs, these are the demand zones. As you can see, these are the demand zones, right? So this is basically what you are waiting for. Now, with that being said, these are the demand zones. So what I'm going to do right now is I'm going to actually label it. So that's one thing about a profitable trader. They always label their charts, right? So we're going to label our charts real quick. This is the 1 hour, demand zone. Demand zone right here. Boom. The 1 hour demand zone. And this is second demand zone right here. Right? So I usually go from the body close to the end of the wick. Boom. 1 hour demand zone. And again, guys, just to reiterate, right, what we are waiting for is basically this. Right? Retest of that demand zone, break. Retest of the demand zone, break. Retest of the demand zone, break. Retest, break. That's exactly what we are waiting for, right? So with that being said, now we know that, okay, boom, this is where price has to come to, for us to take our trades. Now, if we scroll to the left, now, we do see, the other demand zones here. And sometimes, guys, price could easily, reverse from here. It will not even tap this zone and just basically reverse. It happens, right? So, in order for us to mitigate that, what we're going to do is now create this particular line here. So we're going to find where price tapped, very well. So I'll probably put it here. You can put it down here anywhere else, but me personally, I'll put it right above, where price is currently right now, right? So I'll put it right here at this body close and do this. So essentially, basically what this means is, guys, in case I wake up tomorrow and, price is now above here, I'm going to wait for a re-entry and then, place a buy there, right? So what I'm going to do is basically just do this and just put buy above if price is, so but I'll basically just say buy above, right? Basically just buy above. That's just the whole point. Buy above here, right? That's the main point. So we're going to buy above here. We're going to wait for price to buy above here, and also we're going to wait for price to at least come here. So there's two scenarios right now. So the first scenario is, by Tuesday morning or Tuesday New York session, price is probably somewhere around here. If it's not, then we will literally have to wait for price to break above this yellow zone, in the 5-minute time frame. It does not matter what time frame. Me personally, I use the 5-minute time frame. You could wait for the 15 minutes. You could wait for the 3-minute too if you want to, but I feel like my own sweet spot is the 5-minute time frame. So I would wait for the 5-minute time frame to break. So I'll give you a really good example. This is a 5-minute time frame. So essentially, guys, let's assume this was the New York session. I will literally have to wait for price to break above, which it did. Stop loss right there. It could either below the previous lows here, either here or here, whichever one, or here, whatever. But then, because again, like I said, guys, this is not New York session. That is why, price kind of retraced. But if it was New York session, you would have a higher chance or higher probability of price, continue buying, to the upside. But yeah, guys, that's basically what I mean by the entry. So with that being said, guys, this is basically, how I'd mark up my charts. Now, in terms of where price will have to break for me to say that the 1 hour time frame is now bearish, I'll literally have to wait here, because this was the previous low that created the high. So if price was to literally go as low as this, right, I will still not confirm that it is selling until it closes below this. So essentially, if price comes here, I'm going to look at this as liquidity being taken out, and then I'll literally look for like a demand zone here, and then wait for a 5-minute break of structure to then now enter my buys, and then you now magically see price start buying up from here, things like that. So essentially, guys, this is basically where I would wait for price for now. So I'll be like 1 hour break of structure happens here, right? So 1 hour break of structure happens here. This is basically what it is, right? So let me delete this, so you guys can actually have a better view of the charts I'm marking up, right? So boom, right? So boom, this is basically it right here. This is basically how I would mark up my charts. Now, guys, like I said, when it comes to actually marking up your charts, I'll tell you exactly what to do, right? So I'm going to open a note right here, boom, and I'll be like, price has to give a 5-minute break of structure to enter, right? So price has to give you a 5-minute break of structure to enter here, right? Same thing too. I would copy this. I'll actually clone this and put it right here too. Price has to give you a break of structure to enter your trades. And then I would now call this here, the area, I would now call this as the destination, right? Because using the ICC concepts, the ICC concept is basically the indication, right? Indication, correction, and then continuation, right? So this is basically the end of the continuation, but you can then now hold, assuming, price does respect the 1 hour trend, it will continue, buying and stuff like that. That is if it continues to respect it. But to be on the safe side, we usually pull out at the end of the indication right here, right? So with that being said, this is basically how I would mark up my NAS 100 trade. Let me see if there's anything I'm missing. To be fair, the only thing I'm missing right now is basically the imbalance, right? So if you guys don't know what an imbalance is, basically, to me, an imbalance is basically where price is likely to reverse from, given that, the candle that it's reversing from is like, there is no, either buy or sell candle, depending on what candle it is. So basically what I mean by this is, notice how this particular candle, this big ass move that happened here, after this move, there was no sell candle to kind of like, cover half of the candle, right? So it now created another big candle. And then with this candle here, there was no candle to, there was no sell candle to cover half of the candle. But in this particular candle, after this big move here, there was this white candle that covered half of it, right? This particular white candle or the sell candle, after this big move, there was meant to be a buy candle to cover at least half of it before doing whatever it has to do. But because, it did not happen, I would say this is an imbalance, right? This is an imbalance. This is an imbalance. Notice here, after this big, candle, there was at least a bullish or at least a wick that covered it, right? So this is literally not an imbalance, right? So in this case here, this would be an imbalance. This would be an imbalance, right? Until when this candle now happened, then okay, this imbalance is now cancelled out. So in this particular case here, this would be an imbalance. This candles would be an imbalance. So how would you now find the imbalance? It's using a tool called the fixed range tool. And how you actually find this is basically you find this where you have your your buy and sell tool. So if you just click on this particular tab right here on towards your left, you just go straight to fixed ranged, which is right here, fixed ranged volume profile. So you just double click on the candle that you want to figure out the balance, and then just zoom in. And then once you zoom in, you look for the zeros, right? So basically, essentially what this means is, the imbalance, basically meaning this 90 means there were 90 buyers here, but there were 0 sellers, or whatever, how you want to interpret it. But the point is, it's based on, where the zeros is. So in this case here, we can see the zeros came from here to here. This would be an imbalance. So I usually mark my imbalances to be red. And then notice again, there was another 0 here. So I would mark it from here to here. Boom. So once I'm done, I basically just delete this. So essentially what this means is, guys, I am anticipating price to fill this imbalance. right, to fill this imbalance here. So basically what I'm waiting for is for price to literally either do this, immediately it taps this zone, or it taps this zone. I'm literally going to buy. I don't care. I'm not going to wait for any break of structure because I believe that this is where price wants to reverse from. Right, so immediately price either taps this zone. You can pick whatever zone, but it's not the risk. Right, to be fair with you, this is where the confusion comes in because there's two imbalances, and you now try to think, okay, which imbalance should I pick? So me personally, to be on the safe side, I'm probably going to wait for the second imbalance here, right? Simply because, actually no, the first imbalance. It might be the first imbalance, right? Because if the first imbalance can at least cover 50%, then I'll likely go with it. But the point is, guys, either I'll wait for price to either reach this last imbalance and then I'll buy, or wait for price to tap this and then I'll buy, right? Depending on what risk you want to take. But yeah, guys, this is basically what I would mark up as my chart, and then I'll just mark this up and just put 1 hour imbalance, and copy this and just copy and paste it right here. 1 hour imbalance. So this is basically how I would mark up my charts, guys. And as you can see, right now it's currently holidays. Let me just show you real quick. It's currently holidays, right? So you might not see any good movement, but yeah. So you can see, guys, this is basically how I would mark up my charts. I would basically wait for price to either tap this zone or tap this for me to really enter. But me personally, I would want to wait for price to, let me see, let's look at the fibs real quick. Boom. So the fibs is around here. So this is already 50% of the move, right? So if that's the case, I'd probably wait for price to tap this zone here. So this is basically what I'm going to wait for right now. I'm going to wait for price to tap this zone, right? Tap this zone. If this doesn't work out, then I'll wait for price to come above this area here. So basically, if I try to buy and price just obliterates my stop loss, then I'll wait for price to go above this 1 hour zone to be very on the safe side. So once it does this on the 5-minute time frame, I'm now placing my buys. So essentially, guys, this is what I'm waiting for NAS 100 coming in this week. So if I was to use, let's say, like a 20, let's say 27, or let's say 30 pip stop loss or 32 pip, whatever, this is basically what I'll be waiting for right now. Now it's going to be a 10 risk to reward. So as you can see, guys, this is basically how you would mark up your charts, right? So understand again, guys, when it comes to marking up your charts, if it's an uptrend, you're marking the demand zones. If it's a downtrend, in this case here, you're marking the supply zones, right? So these are the supply zones right here. I'll give you an example. Supply zones right here. So notice how immediately price broke this trend. The next supply zone was right here. Boom, it sold. These are another supply zone here too. But notice how it did not even come close to it, and then it just simply reversed, right? So your job is to now, basically figure out where it's going to reverse from, right? So in this case here, when price did this would now be the high that price needs to break for us to say that, and close to, for us to say that, okay, price is now bullish. So notice how even though it wicked, it never closed above, indicating that price is still bearish. And as you can see, if you pip that, you would have probably taken a sell here, and you'd have probably eaten big time in this particular move here. But essentially, guys, this is how you mark up your charts for NAS 100 using the 1 hour time frame. I hope you guys enjoyed this video, and I hope you guys gained a lot from this. I will see you guys in the next video. Peace.